All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the stock market is going to reset tomorrow. What that means, we are either going to find out that inflation is truly falling faster than expected, and that means the market is closer to a pause than we thought, or we're going to find out that inflation really isn't coming down that fast. Now, I'm going to tell you this. It's part of my theory. One of the big expectations or the things going on right now, no matter what happens tomorrow, although it is an important data set, do not underestimate the market to quickly start saying and looking for the next CPI in March right before Jerome Powell. So that's going to be important, but to give you a quick little rundown here, as far as what is expected tomorrow, the main key is going to be the month over month. That is the current pace, because most people are expecting year over year to be coming down, but month over month is expected to come in at 0.5. Core month over month is expected to come in at 0.4. And the interesting part about today, a lot of these were revised very hawkishly today because they weren't this high a couple of days ago. These are going to be the main points. The year over year is expected to come in at 6.2, and the core year over year is expected to come in at 5.5. So if anything changes on the month over month, obviously that will change the year over year, but most people are expecting a hotter print. If these numbers come in as they are surveyed, this will be the hottest inflation point in 3 months. Don't worry, not like 2 years, 3 years. We've gone through a lot of inflation, so this one's kind of light work. But on top of that now, the big thing tomorrow, it is going to be core services or services in general, any inflation in the service industry versus inflation in goods. So we've brought this up a couple of times. You notice energy, that has been falling. That is a good. Commodities, that is this teal right here. It's already peaked a couple months ago. It's been falling for 3 months, and same thing with food. The only thing that has been going up and constantly setting new highs, it has been services. So this is going to be the breakdown. If you are not familiar, my friends, we are live Monday through Friday, youtube.com/the stock market. But tomorrow we will be live 15 minutes before the CPI. That is 8:15 a.m. Eastern, about an hour and 15 minutes before the bell. The market data will be coming out an hour before the bell. So we are going to be trading this live, and we are going to have the breakdown and everything. So if you're confused about anything we're going to go over, hopefully we see you there in the morning. But Chad, it's already been a crazy day. You got a nice little setup coming into it. If you remember what I was telling you about the bonds, I mean, come on. Tell me this don't look like the bonds have been leading the way. We're like right here right now. You know, oh man, it's going to be crazy. But Chad, we got a lot. I got the plays. I got the keys. We have the breakdown. And tomorrow also has a bunch of other events that we're going to go over. So I hope you're ready, baby. Run it.
Walking to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, like I told you, tomorrow is the opportunity to reset all of the market's expectations on inflation. We are either going to confirm that it is truly falling faster than expected, or people are going to say, wait a minute, yeah, inflation is coming down, but it is not this straight line philosophy that we thought, and then maybe that will be the opportunity for the market to catch up with bonds. So I'm going to actually jump back here because we've been saying this, and a lot of people have been bringing this up. Even Michael Wilson brought this up today from Morgan Stanley, JP Morgan's Kalanovic. A lot of people are talking about how the market and the bonds have really separated, aka the bond market got the point after the jobs report. They said, okay, maybe inflation isn't going to come down that fast, or at the very least, they are believing that Powell will keep higher rates, whereas the stock market really is borderline been ignoring that, and the belief is inflation is going to be coming down way faster, leading to a pause. That is why we are bullish, if anything, and still holding all of this January, February rally, right? So this is why tomorrow is going to be important, but like I've been telling you, don't underestimate the market's ability to pivot from that. But now moving into the CPI and what to expect tomorrow, here is one big thing that we are going to be looking at, and this is the January CPI CPI. We are in February now. The CPI being released tomorrow is for January. And what happens in January, they made a new change to the weighting. And what that weighting is going to highlight now is less of an effect on energy and auto prices, but you are going to get a bigger effect of shelter cost weighing stronger. So this is the next key, and what I want to bring up here, it is what to look at. A lot of people have been asking me, what do you think is going to happen? Do you think the market is going to do this, going to do that? I'm going to get into that here, but really it's going to be the breakdown and the interpretation of these key categories and kind of the composition of what we get. So right off the bat, I'm starting with this one, core services X shelter. The Fed, Jerome Powell, a lot of the other Fed members, they have been bringing this up a lot, and I do think this is going to be important. If that does find a way to rise up dramatically, that will not be good. Most people are expecting for this to kind of dance around, not necessarily peak out, maybe come down a little bit, but it's borderline going to be moving sideways at the high. So that's going to be the first thing, and then the second thing, it is what I showed you here with the pretty picture there, goods versus services. This will be a big deal because now if we watch goods inflation go back up, if energy, commodity, even food starts to go back up, that's not going to be good. And then on top of that, if services goes with it, that won't be good as well. But you're going to kind of have to find the balance tomorrow and see what happens if goods services or goods inflation comes down, but then service inflation goes up. That might be a little bit scary for people. But then if you do see services come down with goods inflation, that will be extremely bullish. So not only do you got to keep that in mind, but the final thing, we've brought this up pretty much over the last like 3 or 4 CPIs because this has been the big deal as we have finally started to witness any sort of disinflation, and it is the month over month. So this is what I was saying at the beginning of the video. If that month over month ends up changing in any way, that will affect the year over year. But why the month over month is so important, it's letting you know the trajectory and things and how they're moving right now. Year over year, you're comparing that to last year's inflation. So year over year, January, that was actually 7.5%. So this report 12 months ago, 7.5. What people want to be looking at here is the pace. So hopefully you could add all of this together. Core services, X shelter, that will be its own little unique key. You want to pay attention to goods inflation versus services inflation, aka this blue keeps going up and everything coming down, or if the goods start to come up again, that will change and reset people's expectations that, okay, inflation is going to plummet. And then finally, just keep your eyes on that month over month, because if it's a strong month over month, even hotter and really, really hot, that will make people nervous. And then if this is a weak month over month, that will show maybe inflation is actually coming down a lot faster than people expected. So that's your third key right there, but I got one more, and now it relates to everything everybody's been asking me. How is the market going to move tomorrow? The only way I see we get like a crazy move is if we get a real surprise either way. Either month over month comes in very, very low. You get services dropping alongside goods. That is how we get a big move tomorrow. But one thing I want you to know, the CPI this year, the last one in January, it didn't really cause a monster move, and we actually ended up coming down in 2 days. So it was January 13th, right around here. You could see the market did go down a little bit, closed high. The next day it went a little bit higher. We were still below everything from December, and then the next couple of days it came down before rocketing back up. And the volume today was low. I believe it matched up with one of the lowest volume sets of this year. Ironically, the lowest volume came day after the CPI in January, but point is, we've got to deal with CPI so far this year. If it keeps coming down, it's not like it's going to be a crazy effect. If everything comes in line, I'm not really expecting we do too much. Right now, the S&P 500 options, they are pricing in a 1.7% move. So it's kind of large. So we're going to see how it happens. But remember, there's been CPI days we've had 2, 3, 4% moves. So that's the first part. But then the second thing with everything I just said, I want you to understand, maybe the follow-up move may be bigger than the data. This is how people are going to interpret it. We're going to get more Fed speakers and all of that. So keep that in mind. And then the final point is just like I've been saying, I said it all day today. is just get ready for people to say, quote, there's still another CPI before the Fed in March. And this is why I think there'll be a bigger follow-up move, and that you kind of want to watch the follow-up more than the immediate move, simply because a lot of people are going to get their eyes set on now the next one. And the only way you really get a shakeup or a shock is if there is a big surprise to the up or downside on inflation. So hopefully this helps you out. But like I said, we're going to be going over this live an hour before the bell. So I hope I see you there, and let's see what happens. But let us get into the plays. So right off the bat, I got 3 different plays. I actually didn't make too many plays today, and I took profits on PRVB. I know, sad day. They announced the news. It's finally February 13th, so we got that data. But as far as play number 1, I'm going to be going with HYG. And really, I want to see this as a greed indicator. As people got greedy during the rally, HYG started rocketing. Pretty much if people are feeling really good about the economy, if they are truly feeling good about a soft landing or a no landing, then you would expect the bond market to recover a little bit. And high yield credit, I mean, this is been known traditionally as a greed indicator. So it is falling off a little bit harder than most things. As we started to kind of calm down there, and even the bond market, you see this chilled out. So I want you to keep an eye on this one for tomorrow, because if there is a big downside, I think there is going to be some good looks on that one. Or if people are really saying, yeah, inflation is coming down sooner than expected, the goal is being accomplished, people will get greedy on that. And then one thing to keep in mind, like we're saying, well, the bond market's already down, yibbity yabbity boo, but at the end of the day, it's like the bond market is already priced in these higher rates. So borderline, I think the downside on bonds is pretty much limited. So I'm going to use this as an indicator. We'll see how it plays out, but I would definitely be watching this play for tomorrow. That is play number 1. Then play number 2, baby, Airbnb and Booking. And believe it or not, I'm kind of leaning more towards Booking for the run-up, or playing Airbnb's run-up. So they have the run-up. I think the earnings are going to be very interesting. Airbnb reports after the bell tomorrow. We went over the earnings preview live on stream, but it seems like the expectations already from analysts and everybody else it's already gloomy. It's not that they expect them to do bad, but people are expecting them to kind of warn about the future. They're expecting the growth rate to kind of stay the same way, maybe have room nights come down a little bit, and then especially coming off of Expedia's earnings, people are a little bit more tempered about it. So if there is any real growth and a really just good earnings and people get past that gloomy expectation, that could be good. But with kind of a lot of fear already in it, even though Airbnb has moved up a lot, but so is everything else, this might be a chance for Airbnb to get away with, well, they did better than feared, and then you see it kind of hold up, and especially because people are going to compare it to its peers. Now, the next thing, I brought this up a couple of times already, I don't think it would hurt to look at it again. Take a look at Booking and then overlay it with Airbnb. There is a very, very big difference. So Airbnb, traditionally over the year, they've kind of switched spots with Booking, but right now they could catch up a lot, but Booking has been traditionally stronger here. So like I was saying earlier, I may want to play Booking tomorrow depending on how Airbnb moves. Sometimes it has a killer post-earnings move, and be careful because on earnings day, that first like hour or hour and a half of Airbnb, it could get violent and then it'll end up doing nothing. So that's going to be the risk. But I think Booking, they may lead the way, and Booking has been contributing to the SPY and NASDAQ a lot lately. So keep that one in mind. That is play number 2. And then finally, YCL and the 13F. So this one's kind of a broad play. YCL is related to the yen. The 13Fs, that's not a play at all, but these are the 2 other events that are occurring tomorrow. Not only are you getting the CPI, and that's going to be a big event, you are also going to be hearing the announcement from the Bank of Japan. They will be announcing a new chair or a new head of the Bank of Japan, so that will have a big effect. It's most likely going to move the yen. That's why I'm saying watch YCL. And then on top of that, tomorrow will be the deadline for a lot of hedge funds to file their 13Fs, meaning you're going to hear a lot of companies saying, we took a stake in this, we exited this, we entered that, and that usually causes some movement. So I'm going to give you an update in the morning. I'm sure we're going to start getting them there around the CPI or even towards the end of the day. So maybe tomorrow's watch list I'll have more from you, but these will be the other events that you got to be keeping an eye out for. So those are the main plays. As far as everything else, like I said, all I did today was I made closing trades. I closed out PRVB. We got about 20% profit. It was like $1,800 there. They announced that Sanofi is buying, or that they have bought $30 million at $12.90 a share, but it looks like that catalyst is out of the way. The stock didn't move as much. I thought it would have a bigger effect, but like I've been saying this whole time, once we get that event out the way, it kind of limits everything. So I thought it would be a good time to take it. Took my profit, but I do believe there is still a little bit of upside. We're going to see if it does have one of those crazy PRVB drops. I may be down to get back into it. So going to be watching that. And then ANET, I took an $800 loss on this one. If you remember, I was shorting it after Amazon, and then they had earnings and they killed it. They actually did good for a cloud maker, which I was surprised about. And then they ended up guiding a little bit higher for next quarter. So got out of it pretty early. I don't know how it ended up moving there after hours. I think it went up a little bit and then came back down. So about $1 higher than where I closed it out. So we'll see how that one plays out tomorrow. But those were the only other plays as far as what I'm holding now. Given what I told you with my analysis, still in the NQ, lost some money on this. Remember, we were just back down to like 25,000, came back up to 30. Do I want to close it on CPI? It really depends. Like I'm saying, if the inflation expectations really get reset tomorrow for the bullish side, I'm down to close it. If not, we're going to have to see, and I may want to squeeze it out. The bonds, like I'm saying, I think at this point now we have limited downside. Otherwise, only way I think bonds come down is if the markets come down really aggressively, and that would probably be my least or worst case scenario because I wouldn't want to deal with that one there. So we're going to see, but still riding those out. Unless we get a surpriser, I'm pretty much going to be riding these through as we still have a lot of upside plays. So even to give an update, I got my Amazon. We're only down $50 a share. That's like what? I think 50 cents a share or a little bit less than that. And remember, they've been the underperformer. Same thing with Google, down about $1 a share, but still riding those out. Still got my China plays, and I really do like these. Again, they're down about, I think, $1.50 per share as well. Still in the banks. I think Bank of America is still negative, or they went negative, but then Citi came up. I'm going to be riding those out, and then still got a bunch of other plays. I still have the old end phase. That one's down from earnings. Procter & Gamble, they're down on the earnings. I'm still in the Okta and Meta. They came down. Still got the LMT as well, but pretty much every other play I have is upside. A lot of them are either down from earnings or not, but that's why I'm hoping they could balance it out here. And now over the next few days, I'm sure we are going to see what happens. But most of my plans on closing anything, it will be dictated by either the data. If there's nothing that resets, I don't have a reason to close anything. Otherwise, if something does reset, then hopefully we're able to clean out a lot and reset, and then maybe ride out some of the upside to take over and bring us home, baby. And I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, this is just the beginning. If you don't have the stamina, you better get the launcher. But I know you got the stamina. I know you got the dedication for it. Chad, whatever is happening, whatever has happened, this is still only the beginning. Don't forget that it is February 14th. It's Valentine's Day. You should be in love with the market, but it's serious. It's not even the first quarter of the market. It is only the beginning. I want you to compare how the beginning of the year last year look to where it ended. So you got the stamina. You got to stay in the game. Keep control, and I hope you're ready for a lot more because the game is just starting, ladies and gentlemen. So I hope you're ready. But Chad, drink that water. Stay hydrated, healthy, all of that. You know what to do. I love you. Are you ready for it? I'm going to see you bright in the early. You better get bright in the early. Bright in the early, hubby. Drink the water, okay? Wake up early, okay? Get some good sleep tonight. Amen? Amen. Horn.